Alright guys, in this video I'm going to show you how you can find Elliott waves fast. A lot of people, they struggle to find Elliott waves, especially when they start up with the wave principle, and there's a lot of people that I've taught in the past various ways on how to find Elliott waves. But this video is going to show you how you can find Elliott waves quick and easy, right? There's a certain method and there's a certain tool that I use to find Elliott waves fairly quickly. Hence why there's times where I can do a very quick chart markup from the monthly to the weekly time frame, right, in less than 5 minutes. Right. In fact, not even from the monthly to the weekly, from the monthly to the weekly to the daily to the 4 hourly and even to the minute charts. Right, guys, let's keep that in mind. Now, the first thing I do, right, is I switch my charts from a candlestick chart to a bar chart. And the reason is that candlestick charts, they're, for me, they're too large, right? There's nothing wrong with candlestick charts, especially for analyzing the market, so using identifying price patterns. But they're too large, they're too distinctive, and that's not what we want to do. We don't want to be focusing on price. So first, we need to eliminate the focus on price. Once we eliminate the focus on price, we can then start focusing on price patterns exclusively. So we switch to a bar chart, and then the next step we take is we zoom out, right? So when I say we zoom out, right, we zoom out of price. We don't want to be focusing on price. We want to be focusing on waves. As soon as we do that, guys, the process becomes so much more easier. Now, this is the Doge USD chart. So this is the Dogecoin chart against the US dollar, which is calculated by TradingView. And already the process is simpler. When we look at the chart like this, we can all agree it's hard to identify any sort of pattern or wave count this way. Yes, it's fairly easy if you have a very uh, distinctive viewpoint and you're very experienced with the wave principle. However, for someone who's starting out, you want a much more quicker and a much more easier way to start identifying waves. So now when you zoom out, you can see, right, patterns much more clearly, right? And we can already identify an impulse wave in the market, right? We can already identify an impulse wave that quickly, right? Now, according to the rules and guidelines, especially for impulse waves, wave 3 is normally the most extended wave, and wave 3 will normally feature an impulse wave within an impulse. So as we can see, we see a 1, 2, 3, 4, 5, right, within wave 3. However, what's most important here is that the current wave, wave 5, is currently longer than wave 3. So wave 5 is most likely also extending. So we're seeing a wave 3 and wave 5 extension wave in progress. Now, as we've done this, we immediately know that wave 5 is still in progress, right? But because we've zoomed out, we can immediately identify just by dropping a time frame to see where we are, right, in wave 5, right? Now, we're now going onto the daily time frame, and we can now look at the market much more distinctively. We've got wave 1, 2, 3, 4, 5, right? Fairly simple. We know this is a 5 wave because if you look in between the markets here, wave 1, 2, 1, 2, 3, 4, 3, 4, 5, you can see another extended wave 3. Just like that, guys. Fairly simple and easy. And as you can see, we have a double zigzag correction with W, X, Y, just like that, and wave 4 ends here, right? So as you can see, just by a simple technique of zooming out of the charts, we are able to identify the more significant waves. And you can see a double zigzag pattern here, ends the correction, and wave 4 ends right here, right? So now we can start to project where wave 5 is going to end. Normally, wave 5 ends at 0618 of wave 1, right? We set this to our Fibonacci tool to logarithmic, and we look for the 0618, and we now have a target for wave 5. That's simple, guys. Nothing too complicated. This is the most easiest way you can look for Elliott waves. Zoom out of the charts. And the best thing about it is that this technique works for any market. Now, let's, for example, look at the Russell 2000, right? I have the same chart here on a different index. Now, the Russell 2000, right, is a fairly distinctive chart also in progress. Now, let's delete this chart and let's keep the chart zoomed out here, right? And we're going to have the same kind of look. We're going to start off at the bottom of the chart here. We've got wave 1, 2, 3, 4, 5. That easy, guys. As you can see, very clear and very distinctive Elliott waves, as you can see in this impulse wave. We now mark this as wave 1, and we have a wave 2 correction, which bottoms at the previous wave 4 of the lesser degree, which is very common in bear markets. We've now begun the second cycle wave higher. 1, 2, 3, 4, 5. Again, guys, that's simple. Nothing too complicated. Only because we managed to zoom out of the charts and we've managed to identify where we are within the market sequence. 3, 4, 5. Now, the reason why we're marking this as wave 5 is because we've seen wave 1 extend as the longest wave, right? We know wave 3 cannot be the shortest wave within an impulse. Yes, this market may continue to extend higher. We know wave 5 cannot be longer than wave 3, right? So we can just prematurely mark this as wave 5. Yes, the market may continue to go higher, but I believe it's very unlikely that we will see this market go significantly higher from here. So it's to my belief that the Russell 2000 has topped, but as you can see, regardless of whether it has topped or not, we know this is either the start of wave 5 or the beginning of an extension wave on the Russell 2000. But it's that simple, guys. As soon as we go into the daily time frame, the process continues to become much more simpler, right? As you can see, let's look at the impulse wave here, wave 1, 2, and then we've got wave 1, it extends again, 1, 2, 3, 4, 3, 4, 5, right, as part of the extension wave, which we mark as wave 3. And then what we have here is a triangle pattern as wave 4. With a triangle pattern as wave 4, and the market ends wave 5, just like that. So that quick, that easy, that simple. Once you're able to identify the impulse waves within the market, you will be more comfortable in identifying the corrective waves in the market, because after every 5 waves up, you have a 3 waves downwards correction. I hope this video was beneficial. Guys, if you are willing to help out others, please share this video. Please let them know about it, especially if you want them to understand the wave principle, you want to understand the wave principle, and you found this video fairly easy to understand. Share this video, like and subscribe, and let me know your thoughts on it. Is there anything I can do better in explaining? If so, please leave a comment or send us a DM on Instagram. Hope this video was beneficial, and I'll see you on the next one. Sure to follow us on Discord. Also, follow us on Instagram, which is on our profile page. And if you want pairs and updates, everyday updates on the major Forex pairs, get the wave forecast link in our bio.